Good morning, everyone. Dan here with Tradingology.com and the trading room for May 13th, 2021, getting the doors opened up. As usual, we do have Dave joining us from our partners over at Strong Market, so we welcome him in again and I wish him a fine Thursday. Good to see you, Dave. How you doing?
Good morning. I'm doing well. It's sunny out.
Excellent. Sunny skies everywhere, even for Tom, hopefully now. Tom, to get that snow to go away. Good to see you, Tom, joining us once again.
That's a nice looking dog there, Tom. What kind of dog is that?
Let's see if he gets his keyboard up and running. While Tom's getting settled in, we'll see what kind of dog he's got there.
He could be working too, so maybe he can't.
He's got 70 today. He had 30 the other day. Now it's 70. He's calling it bipolar. So there you go. Or they're going to hit 70. So perfect. Well, you're like the market, Tom. Yesterday it was way down. Look what we're doing today. Internals that just crossed the positive 2,000 number.
Now, this is a market, I mean, if we continue in this pattern, very similar to 2007, 2008, where we had days in which, we were down 600-700 points, and then days were up 600-700 points. The trend overall could be down. We'll see. We haven't quite determined what the trend is yet. But today, if you look at a daily chart of the Dow, we've got an inside day. So an inside day is not a reversal. It's can be considered a continuation. So we probably get another leg down if we hold at these levels. If we go above yesterday's open, which is right about there, then we could see higher highs. If not, it'll be a continuation, probably back down to, what do you got there, the 50 or the 200 day?
This is the 50. The 200's way below.
Way down there, yeah. So we'll probably hit that 50 day if we're in a downtrend. We'll hit that, maybe go through it a little bit, maybe even come down all the way down to the 200. That would be unusual.
I do see right now with the current market internals, we're showing a bull trap on the BOP. So keep your eye out for that. Yeah, this is a little, like you say, an inside day, not a reversal, but this could be a fake. We do have a 14, so there is institutional buying happening right now.
Yeah, I think they're stepping in. They're saying, hey, okay, there's some growth stocks that have really been beaten up lately. Let's see what we can buy.
Tom says that was a picture of a golden retriever that went on to its resting place a few years ago. So sorry to hear about that a few years ago, but beautiful dog, Tom. That's for sure.
Beautiful dog. Yeah, absolutely.
Yeah, a little bit of give and take on the tech side there. Not an inside day on the NASDAQ. We're looking to get above the high, see if it hits it or not, but we are dropped below the 50 on that one. So we're keeping an eye on that. We've had obviously much more bearish sentiment happening on the tech stocks recently.
Yeah, so we could come on the underside of that 50 and just kind of test that as resistance, see what happens when we get to that point.
So obviously with the indexes looking like this and the internals looking like they do, we can obviously expect to see, what are we up? We're up over 500 points on the Dow now. So the futures are probably off my charts and they're running up into the new person's level. So just a major rocket up this morning that started before the open, around 6 a.m. Eastern time, 6:30, it just started blistering up. And I wanted to take a look and show you this guy because we know every Thursday we're watching those unemployment reports, right?
Oh yeah, I didn't even see the number this morning.
Well, I saw the number. I also saw something interesting with it. So let me zoom in a little because I know this is small. So forecast was 487. They're happy with the 473. We'll have to check out Bloomberg to see what cool headline they came up with that. But I started looking, I'm like, what's this little sideways carrot over here? That's not always there. So I wanted to zoom this in, check this out. So we have previous's. These are all revised, and they're all revised worse.
Oh.
728 came from 719, 744 up to 769. So apparently they were reporting wrong or something was wrong because they're all higher than their previous reportings.
Holy cow. Every single one was except for the first one on April 8th, but all the other ones were revised way, pretty much higher. I mean, if you add them all up, you're probably looking at another 70,000 maybe. And then this one was 50,000. So about 120,000 difference to the downside.
Yeah, there's 10, there's another 10, there's, yeah, that one's huge. That one's 40,
Yeah.
37 to be exact.
No, that's
Or-
50. So the forecast, I mean, they were off by quite a bit on the forecast. So
I
then
just
they
found that
revised the
interesting.
previous ones. Yeah, it was like, it was about 45.
Yeah, so they make it's green over here if you look at the actuals, but no, that's not actually the actual because they said 547. No, it's really 566.
66, right?
Interesting.
Yeah, they were all pretty much revised a little bit higher.
The little nuggets you got to look for. What's our natural gas looking like? Right on forecast. I'm always curious. And we got the 30-year bond auctions. Had some interesting bond stuff going on. Let me pull up the weekly. I'll show this to you. Look at the 10-year on a weekly.
We hit 1.7 this morning, backed off a little bit.
Right and touched that trend line. Just barely peeked over it. Let's switch us to a daily and take a look. Yeah, look at that. Look at that move yesterday. Almost 5%.
That's a big one.
So we keep we're testing that. As we know, we saw it hit it, trade above it, or I shouldn't say trade above it, but it was above it for a while. Is it going to retest back down or is it going to break through? We will see where the weekends.
The more times it bumps up against a trend line like that, the greater the chance that it will eventually break through it, which is concerning here because, boy, if we get much more, if we get 2%, if we go over 2% on the 10-year, that's a little scary.
So yeah, look at how much of a move it was prior to that, even just this massive wick on the 7th. So what was that, last Friday? Yep. So within a week, it's went from under 1.5 to above 1.7.
And it's kind of funny as I was listening to myself just now saying, oh, if we get over 2%, it's kind of scary. 2% is still so low.
Yeah.
Historically, it's incredibly low. But in the context of all of the debt that has been issued in the United States, going up over 2% is kind of a scary situation, especially for all those corporations that are holding, adjustable debt, based on interest rates, in which most corporate debt is. It's tied to some sort of benchmark, either it used to be LIBOR, but now they're coming out with a new benchmark for interest rates on corporate debt. And so, if it starts going up higher than that, a lot of the interest payments can't even be made now by a lot of corporations at 2%. What happens if it goes to 4% and there's a reset on corporate debt? That's the scary part.
Yeah, on top of that, we obviously know that Biden wants to do higher corporate taxes on top of, so it'd be like a double whammy.
Yeah, exactly. I mean, there's just too much debt out there. I mean, the Federal Reserve has really pushed debt to the limits. And as soon as interest rates start going up and bond prices, remember, when interest rates go up, bond prices go down. And so a lot of people, are going to be hurt, especially, the Federal Reserve alone, with the amount of corporate, they have corporate bonds as well as as treasury debt. Those prices are falling, but they're stuck in an interest rate coupon of, 1.5% or 1%. So it could be tough for them too. It could be really rough.
Definitely. Good morning, Andre. Good to see you joined us.
Morning,
we're wondering about you.
Yeah, we're ready to send out a search party.
So, do we want to give some of our friends some bad news? What's going on in this crypto world?
Yeah, we might as well do it.
So check this out, gentlemen. Dave calls me Mr. Fib now. I had this old fib on with this, looking for a target of 71,353 on Bitcoin for a while because it was in this trending up pattern. Well, let's see what happens. If we get below this or we get a target up to that, ignore this one for right now. I'll get to this in a second for you. Lower low, lower high, we're moving up. So we had a retracement. This retracement came way down, but it didn't break it. Well, I got bad news. It just broke it.
Uh-oh. Yeah.
This fib sequence has been broken. So according to that, obviously it's not concrete stone, but probabilities of it going back to that 71.3 just got drastically slashed.
So what do you think? Do you think it's the fibs or was it Elon?
I think it's both.
Kind of playing
I
off.
think it's interesting that this came out when he announced it. I was reading about the articles last night, saw it all over Twitter, where Tesla is no longer accepting Bitcoin. If you guys hadn't heard that news, and suddenly they're blaming this on Elon's crash. I highly doubt it's just him. I think they're using him as the excuse personally, but obviously I don't know the underpinnings of what's happening there, but it feels like an excuse to me.
What really bothers me is that he put how many billions of dollars into Bitcoin from his corporate treasury, not knowing that Bitcoin transactions take up a lot of energy.
Yeah.
The basic tweet was, oh, Bitcoin uses a lot of energy. In fact, it's really, really, really high. And so it's not green. I mean, Tesla is known as the EV manufacturer, they're green energy and all this stuff. And he just finds out that Bitcoin is the biggest consumer of electricity in cryptocurrency ever. I mean, it doesn't even compare to most of the other coins. It's a hog. And he didn't know that.
Yeah, what happened to do your own research?
Yeah, I mean, he didn't. So he puts billions in Bitcoin without even doing basic research, then reverses himself saying, hey, Tesla's going to, accept Bitcoin. Now we're not going to accept Bitcoin. And it's only been like a month, hasn't it?
Yeah, very soon, very short time.
Now, come on. I mean, are you kidding me?
And then you got people sending him messages. Thanks a lot, Elon. You just made me lose my house payment because I put it in a Bitcoin. Well, maybe that person shouldn't do that either.
Yeah, I think a lot of people are going to lose a lot more than their house payment or their deposit on a house. I think the one tweet I shared with you was a deposit on a new house.
That's what it was. So I quickly threw on a reverse fib just to see how low might it go. So I grabbed the last swing high and I just grabbed, a close swing low here, unless I could adjust these. I haven't done a ton of work on it just to see where some good valid ones are. But, the first one from this word ended could be, 43.2. If I pull it all the way down to here, we could be looking at going all the way down to 35.9 for some potential targets to the downside. We'll see.
Yeah, so interestingly enough, also yesterday, of course, cryptocurrencies declined along with stocks again, showing that there is a correlation with risk assets. So just be careful. I don't know if we're at the all-time market highs at 35,000 on the Dow, that 42 to 43 level on the S&P 500. Not really sure. Not yet. We don't have enough evidence to indicate that the trend has changed. But if it has, and we do kind of go into a sideways market or worse the rest of this year, then cryptos are pretty much stuck in that trading range as well.
Tom nails it. Rule number 1, never trade with rent money.
Yeah.
Exactly, Tom.
Yeah.
Don't trade with money you can't afford to lose.
Yeah.
Because as soon as you think you know what's going on, you're in a bear market, they come back with positive 2,000 internals and they make it a big up day.
Yeah. Of course, the spreadsheet yesterday indicated that we were going to be up 200 points on the Dow anyway today.
Yeah, so, I should mention, that's a good call, Dave. You reminded me of that for where did we see 2 days in a row here on the Dow? The PA was a 229, then we had a 122.
That's a good indication that we're going to get some sort of reversal coming in sometime soon.
And we're calling out the notes. We just, like we always say, it's data driven. So one thing to keep an eye on is we did move to neutral on the swing signal. So we'll see. Is that just the slight, buy sell went down, long-term signals trending down, empty volatility is picking up. So there was only, the PA was the only real bullish signal in there. 2 days in a row, I wonder if I add this up, that equals 351. Well, we're up over that. So we were up 500. It's dropping a little bit now, just under 500, 480s right now. We're ticking on. And the NASDAQ is, let me pull that one over just as well. We saw 5 columns filled in there, but we have a quad bottom happening.
That's weird. Yeah.
Just
That's
keeps going at -6 on the buy sell.
Yeah. I've seen double bottoms and triple bottoms on that buy sell indicator, but I've never seen a quad bottom. So does that mean that, see, here's for today. Okay. So if you guys are looking for something to kind of get an idea of a trend change, we're up, everything kind of rebound. Maybe we're oversold on everything yesterday at the close. So people are in buying. If we close at really bad levels today, if we reverse this rally, then that is a pretty clear indication that we have completely changed trends, or we just kind of stay at this level. We have an inside day on the daily charts, and then we reverse that completely tomorrow. That's also an indication. So I would watch the close very carefully today. If we have an inside day and we don't surpass the previous yesterday's open, I think I said close before, but I meant open. If we don't surpass that yesterday's open, and we would completely reverse today's advance, that is a pretty good indication that the selling will continue.
So keep your eye on that. Absolutely. And we'll put some stuff in our Slack channels. Hey, yeah, we closed above, we closed below. We'll see where this day ends. It's still early. We're only just over an hour in.
Yeah. By the way, if you hadn't seen it, and I didn't have a chance to post this yet, but there is a terrific, really terrific interview with the CEO. I'm gonna kill the company's name. Let me see if I can get a good. Not gonna find it, I don't think.
While you're bringing that guy up, I'll just show you the, I don't know why my window always does that. The move on the Dixie, since we saw the same move on the bonds, we had a 0.67 move yesterday on the US dollar index. And today it's hovering right above.
All right, it's Tkium, I believe.
Tkium?
Boy, it's a tough one. Here, I'll put the link in the channel. Anyway, these are the guys who run the ETF for soybeans, SOYB, KORN, or COR, KORN. Thinking of
It's a good band.
Yeah, exactly. CORN, corn, cane, CANE, wheat, WEAT, those ETFs. And it was an excellent interview. It was on Benzinga's morning show yesterday at about an hour, 4 minutes in. And the CEO was on, and he explained exactly how what his strategy is for those ETFs. He explained very interestingly, he does a lot of fundamental work, of course, because he has to keep up with what's going on in these agricultural commodity markets. One of the things he said is typically they have a 40-day supply of corn, wheat, soybeans, all of those. Yeah, exactly. And tags is one I haven't heard of before. I'm not quite sure exactly what that is. He mentioned it, and I thought I didn't catch it correctly. Why don't you click on that and see what that says? I'm not sure exactly what that is.
Which one?
Tags, TAGS.
Oh, gotcha.
I don't know what that is.
Agricultural fund provides. Da, da, da.
Oh, he's got one: corn, wheat, soybeans, and sugar all in one. Interesting. Yeah, that's interesting. All right. So he's got kind of a combo there.
Yeah, he's building a
But
fund of the individuals.
yeah, so his strategy, which is kind of interesting, is he doesn't use the front month contracts. It's all futures contracts. He doesn't. So in other words, if like when we looked at Morton Schulman's book on commodities trading back in the 70s and how he profited from the rise in commodity prices, he invested in the futures contracts, and it's a very leveraged position. A lot of investors maybe not feel comfortable doing leveraged futures contracts directly. So he created these ETFs. Now, what he does is he does not do the front month contract. He does the second and third month contract, and then he does a year out contract. So he's spacing it out for a longer term. So if even if commodity prices decline typically in the second or third month, he still has that 1 year contract out into the future that typically holds his value pretty well. And so he's only looking at supply and demand. So one of the things he said was that typically you have a 40-day supply in soybeans, corn, wheat, and sugarcane. That's not the case anymore because of the supply chain constraints over the past year. There's only a 10-day supply.
Wow.
Yeah, so it's been reduced by like 75%. Between now and September and the beginning of October, which is typically the growing season for like corn, especially, it's harvested the first week of October. Between now and then, that 10-day supply is not going to increase. It might increase a little bit, maybe come September or in October when the new crops are coming in and harvested. It might go to 15 days or 20 days, but that's still way under the typical 40-day supply that they've been used to for 10 years. And so prices are probably going to remain relatively high, but he said right now he indicated that they are at a high level, and he would wait for them to pull back just a little bit. But he expects those prices to remain relatively high, though.
Yeah, and just looking at that USCI that we watch, zoom in on that one here. We are seeing exactly that today, where we had a major jump. This is on the weekly, so if we want to see a daily, I'll pull that up. But yeah, we had a gap down today, and we're already way above this short-term channel since we got in our position.
I would say, at least to revisit that channel, maybe even right to that previous high there is possible.
This could be an interesting one there.
And then, you know what, I'm gonna probably allocate some funds to a new position right at that level.
Yeah, just under 38 looks like a pretty interesting area. If we get a pullback to that, it could bounce right off of this channel. We'll see. Maybe this lack of support
bounce around there. Yes, absolutely. We'll see. Yeah. He said that they are high. He's anticipating a little bit of a pullback, and then probably some steady trading in a range between now and September. And then once we get into the winter months and we start to use up that supply, the harvested supply, we could see another run up in commodities maybe later in the year towards the beginning of the next planting season. So all of these agricultural commodities are seasonal, but he anticipates at least for the next year to 2 years, we're going to see higher prices.
One more way of leveraging the commodities trade. I like it.
Yep.
And not just a regular one. So I'm gonna do some more research on that myself, just because you don't see many people talking about, hey, let's use something a year out.
Yeah, he did that because he realized that, the front month is extremely sensitive to supply and weather conditions. For example, he was talking about Brazil has not had a lot of rain recently, and so their crops are going to be fewer than normal, and they're a big. I forgot what he said. I think they're a big soybean supplier, and if they don't get enough rain, they're not going to have the yield that they typically have. So he said, watch for rain in Brazil And you could probably tell that soybeans are going to pull back a little bit because the yield on those soybean crops are going to be higher.
Interesting.
Yeah.
That's why we watch the weather. That's why we got the weather with Dave and Dan every Tuesday and Thursday.
Yes, hitting the Midwest and the East Coast. So we got a lot of corn out there in the Midwest, and we got corn here in the East, but not like the Midwest. That's for sure.
Well, to wrap up the show, we are breaking through the next level and getting higher highs. We're up 530 points on the YM contracts, 222 on the NQs, almost 2% up. Speaking of 2%, RTY did break 2%. It just fell above it. It couldn't hold that above. So we'll see if anybody holds above and continues higher, or if this is a resistance point. But between 1.5% and 2% across all index futures. Same thing for obviously the indexes themselves. They're up about 1.5% on all the cash indexes. So it's a happy Thursday. But again, as Dave mentioned earlier, watch the close. That will be a very telltale sign which way it may go after that.
Yeah, either inside day with a reversal tomorrow, but actually a reversal tomorrow on a Friday. Boy, that would be unusual, huh?
Yeah, because they're always happy Fridays recently. So we'll see.
Yeah. We will see.
Trade safe. Send us questions if you have them. We're in the Slack channels. And we'll see you guys on next Tuesday.
All right, guys. Have a great weekend. See you then.
Take it easy, Andre. See you, Dave. See you, Tom.